Hello traders. So finally all-time high has been tested, and I think all the traders have been delighted by this fact that Nifty has been able to establish a new high. Now just before I go ahead in the video, I think a couple of weeks back I had shared one weekly sectoral analysis video with all of you, and I clearly stated that all-time high can be tested, and I think that point of time Nifty was somewhere around 25,900 or just above that, and from there we have been able to rally pretty nicely. Now in terms of trend in the weekly time frame chart, by the way, this is the weekly and this is the daily time frame chart. So in the daily time frame chart the trend is up, the momentum is also up pretty much fine. The trend is up in the daily time frame chart. Momentum is okay, not that great, and the reason for that is recently we had the trend staying up. We had little bit of consolidation in the Nifty. You can see that first we had an up move, then the move extended, again we dipped down, and then we shot up. So within this span of few days, Nifty spent a lot of time in a particular range between somewhere 26,200 and 25,800. So that is the reason there was some sort of loss of momentum, but otherwise overall trend remains up, biasness remains up. In terms of levels, if you ask me, is there any next resistance level in Nifty, then as per the daily time frame chart, the first short-term resistance, the word is short-term, will be somewhere around 26,500 or 26,520 levels. Okay. Going ahead with Bank Nifty. Bank Nifty, I think it's pretty strong. In terms of momentum, it's pretty good. In terms of trend also, it is pretty good. Slightly overstretched, not overextended, slightly overstretched, but that's all right, because generally any indices, any stock which is in a high momentum, they will remain overstretched at some point of time. Only one thing which you need to understand is what is happening right now in the PSU banking space and the private banking space, and I will come to that in a bit. But before that, we need to understand in terms of levels. Over here in the daily time frame chart, we have already hit a short-term resistance level in Bank Nifty, which is at 59,800, 813. Is it a danger to the trend and the momentum in the daily time frame chart? So far, I would say no. Things are pretty much fine. Trend and momentum, I think, is fine in the daily time frame chart. No problem. In the weekly time frame chart, although we need to be little bit more careful, as the weekly time frame charts level is at 60,350, 360, which is not very far from here. Just I think couple of days rally or maybe 1 week of rally could land up in that area. So when we test that particular zone, we will need to be little bit more careful. Any warning signs or such like that? The answer is no. So far, no. Going ahead with the PSU banking space, I will continue to have my same view that the trend is up in the weekly time frame chart. Amazing strength in the trend, very good momentum, super duper momentum. Even in the daily time frame chart, you can say that strength of the trend is very good, but momentum is slightly dipping down, and the reason for that is choppy movement here, choppy movement here, and overall calculation of momentum says that things are not that great. Again, if you go back to the weekly time frame chart, you will see that we have two consecutive inverted hammers. Now, is it a top or something like that? Frankly, I would not like to predict, as I am more of a reactive trader, but the matter of fact is यहाँ पे एक resistance है. There is a resistance at 8,400 levels, and as a trader, would I like to go long at this particular junction? The answer is no. But if I have a long position, or if anyone has a long position, it makes sense to hold on to them with a trailing stop. Now you will say that at one point of time आप बोल रहे हो that it is overstretch, and one point of time you are also saying that you should hold on to long positions. What is this? Well, what happens is many a times in the markets when a particular sector or a particular stock is in a bull run and a very strong bull run, even if there is some sort of lack of momentum or loss of momentum, it continues to move higher before it tries to take a U-turn. So when exactly the PSU banking space will take a U-turn, we have no clue. So that is the reason going long now at an overstretched level makes no sense. But if you continue to hold long, which you have bought probably at a lower levels, makes more sense, and exit only when the price corrects and closes below your trailing stop loss. That should be the strategy in the PSU banking space. Now, the private banking space is pretty much different right now. The private banking space is one of the sectors which has the highest weightage in Nifty, and right now it is not that much overstretched. In fact, it has just started moving up. First up move, deep retracement, and then the follow back buy. Yes, we are at a short-term resistance. I can agree with that. But is there any warning sign or such? I would say no. And a lot will depend on 2 to 3 stocks like HDFC Bank, Kotak Bank, Axis, ICICI. In fact, I saw that ICICI, which is a weaker bank, also went up, I think, a couple of days back. It's a good sign, basically. So private banking space is one of the sectors which I have been repeatedly saying since last couple of weeks that it will be responsible for Nifty to go higher. Energy pack. Energy pack, in terms of trend, it is up. Okay, it's up. The displacement of the moving averages is fine. Over here, even the RSI looks fine. The momentum looks fine. Only thing is not much rally is happening. The reason for that is what has happened is one of the heaviest stocks in terms of weightage, Reliance Industries. If you just open the chart of Reliance Industries, you might find that it has rallied a lot and it is overstretched. But other stocks which are having lesser weightage in that particular index, the energy sector, they had rallied and they have pulled back on the downside. So if you are a trader and if you want to trade on the long side, you will have to find stocks which had rallied earlier, given a deeper pullback, and now they are trying to move higher from here. Do not try to buy any stock which is overextended on the upside just because the sector is looking bullish. Auto pack. Now I would say that if you are a short-term trader, short-term in the sense few days to a month, then would you like to trade the auto pack with the confirmation of daily and weekly? Probably no, because the trend is up, the momentum is not supporting it, and when that happens, I would probably not take any trade from the daily time frame chart. It can go up, the price can go up, but it could be choppy. You can see this rally. This is a high momentum rally, and this is also a rally, but this is like, choppy. Goes up, comes down, goes up. You might make money, but you will not make money very fast. But over here, I think if you compare the monthly time frame chart of AutoPack and the weekly time frame chart of AutoPack, and if you have momentum and trend supporting in the monthly, then things can work out over here. So I think trades for a slightly longer period of time can be checked, but you'll have to be very, very, very stock specific. And this is not a time in the auto pack where you can jump in and probably take each and every trade. So just be careful about that. And you will have to have a slightly larger horizon than normal. Okay. Consumer durables, I would continue to maintain my stance. Trend negative, momentum negative, even in the daily time frame chart as per Dow theory. I don't think I need to talk much. Lower highs, lower lows in terms of trend, and even the momentum is negative. So overall biasness continues to be down. Consumption pack, again, if you want to trade the daily and weekly, I would say trend is up in the weekly, momentum not supporting, daily time frame chart choppy. So again, no views on the consumption pack. Finance. Finance is a sector which is pretty strong right now in terms of momentum, very good. In terms of trend, pretty strong. Daily time frame chart had been little bit choppy, but overall I think it continues to show good strength, I would say. FMCG, it's trying to move higher. In the last 3 weeks, you will see that they have been making lower wicks on the downside, and as a trader you would say that you can suddenly see that the sector is not able to move any lower. Fine, I would agree with that, but my friends, how many times it has happened in the past? See over your wicks, again wicks, it shoots up, goes down, shoots up, goes down. So maybe even if it shoots up and goes here from 55,000 levels or 55 or 56,000 levels, maybe 1,000 points higher, maybe 1,500 points higher. But what's the point? We need more structured trend. We need a downtrend like this or an uptrend like this to make money. This is completely choppy. So let us give us some clarity. It needs to give a proper breakout, retracement, and then move up. Then it makes some sense. So again, I would, like avoid trading in the FMCG pack. IT pack continues to surprise us all. One of the dark horses right now, along with the private banking space. Trend continues to improve slowly and steadily with lesser volatility. Momentum continues to improve, and so is the daily time frame chart. Slowly and steadily it's improving, which is a good sign. Okay, so the biasness in the IT pack is up. Infra pack, in terms of trend, up. In terms of momentum, so far up. Only thing is, last 2 weeks, surprisingly, it has been consolidating, and what has happened over here is it did give us a good rally, a deeper pullback, shot up, and then in the last couple of days, you must have seen the large cap stocks like Bharti Airtel, L&T, they were chopping around, and probably Airtel even gapped down for a bit, and then it recovered a little bit. So I think that has added a bit of toll on this sector. Overall, the stance, the biasness continues to be on the positive side, but we need follow-up buying. Like after the initial throwback or the pullback on the upside, we need further follow-up buying so that the sector continues to move higher. Without that, it will be difficult. Metal pack. Now, metal pack, if you're a trader who is trying to trade your time your trade from the daily and weekly, you might not find much value. The reason for that is the momentum period is over, and now we can see we have a dip. The momentum has dropped. Daily time frame chart is looking okay, not that bad, but nothing great. But I think we need to wait one more week probably, and then we could have probably a better time. Probably, I'm not very sure, but let's wait for a week and then things might change. Pharma pack. Pharma pack, again, one of the dark horses, which consolidated pretty much for a very long time, and in last couple of weeks or before that, I've been clearly saying that pharma pack is one of the sectors which can outperform, and finally we have a rectangle breakout in the pharma pack, and you can see the way it is moving. You can see the way the candles are being made over here. So overall, positive biasness in pharma pack. All right, PSE sector, now suddenly what has happened is the trend is still up. The momentum is up, fine, but it's losing its grip. If it wants to go higher, it has to go up higher as fast as possible. Otherwise, the momentum, once it is lost, there'll be no point looking at this sector. So again, daily chart is looking weak for sure, and it needs to move up as much as fast as possible, I would say, because momentum likes speed. Realty pack. Well, realty pack was one of the sectors which was looking very, very attractive at one point of time, and suddenly it has dropped. This is a good candle, I would say, in the weekly time frame chart. This is a high wave candle, and generally high wave candles, uh, you know, they come up at a point in the structure of a trend when a particular trend is overstretched at one juncture. Now, if I just drop this trend line over here, you can see that we do have some sort of trend line support over here. It's not a very, very strong trend line. I will agree with that. It's not a very strong trend line, but something is visible. Plus, we also have this we also have this 78.6% Fibonacci retracement. So both these things have played a part. Now, is it a strong bounce back or something? The answer is no. Only the positive point is we have a high wave candle at a support where there is a trend line and there is a Fibonacci support in the daily time frame chart. Anything apart from that is not interesting. The sector is flat. You will say, but it has dropped. Is it not a downtrend? I would say, yeah, it is. It's a downtrend in the daily time frame chart. But overall, when you look at a sector, overall, it's like pretty much consolidating with on the upside only 2 to 3 candles were visible, which were also not full bodied candles. So not extremely interested in this sector as of now. We have a couple of good signs like this Fibonacci support, this trend line, plus the high wave candle. Let us wait for 1 week or more and then let's have a look back at the sector and then decide what to do. Because you don't want to jump in a sector and park your money where clarity is lacking. India Defense. India Defense, I think it has, not been looking very good. Shot up and consolidated. It tried to maintain its momentum for a very long time, but I think since the close of this particular week, the momentum is dead now. The trend will remain up, no problem with that, but there is no momentum visible and it is consolidating. So yes, as a short-term trader, you will see spikes on the upside. You will see spikes on the upside from year to year or from year to year, from year to year. You could trade in short-term, but if you want to combine trend and momentum and if you want to have these sort of trades with complete clarity, like, high momentum trades quickly, these sort of trades as of now, I think so they are a little bit difficult. You will find these short-term trades, but nothing much. So I would not be interested in that. Midcaps continue to move higher, looks strong. Only thing is that they have hit a short-term resistance over here and we need to surpass this resistance as fast as possible so that we can move higher. And along with that, if I just convert this chart into a line chart over here, do we have a negative divergence? The answer is no. Why? Because we do have a lower high and a lower high again. So this is not a negative divergence, just for checking. All right. And like overall, if we sum up, I think it's a bullish market. It's a bull run with resistances being near 200 to 300 points away from here. So be careful that as a trader, you don't pile up a lot of long positions when market hits a resistance. And at the same point of time, you should know which sectors are going to perform and try to park your money only in those sectors. Don't try to park your money in sectors which are not showing momentum. All right. So trade wisely and prepare yourself for the Monday's trading session. Thank you.